Here's a financial model that has been prepared to assess the financial needs of your company in order to maximize your profits and to enable business growth. The model under discussion is for a catering business. The catering services business financial model has been designed for you to forecast up to 60-month operating budget and cash flows with a relevant set of assumptions around cost of goods sold and expenses, and to then add on the detailed revenue forecasted streams. The main elements of this model are input sheet, depreciation and amortization table, income statement, cash flow statement, balance sheet, break-even analysis, project evaluation, and the dashboard. Moving on, the input sheet contains inputs which can be changed and they impact the calculations. Therefore, the changes are applied to all relevant sheets. For instance, if I change this average person price from 25 to $40, it will be applied to all the relevant sheets. Moving on, the revenue analysis sheet has been prepared to estimate the revenues for each of the month given each of the products of the company, and it also calculates the cost of goods sold. Moving on, the startup summary has been prepared to provide you and your investors with an analysis of new startups' investment requirement. It helps business to present a snapshot of the company to prospective investors and helps to raise capital. This sheet also calculates the total amount of funding which will be required in the first year. On the depreciation table gives you the depreciation per month for each of the fixed assets, and under this there is an amortization table which gives the loan amortization amount of each of the external fundings. Moving on, the income statement has been prepared to calculate the profits for each month and each year. We calculate the gross profit first and then move on to calculating the operating expenses, the profit before interest, tax, depreciation, and expenses, and finally the net profit or loss for the year. Next, we have the cash flow statement. This cash flow statement contains the cash ins and cash outs of the company, which belong to three different streams: cash from operating activities, investing activities, and financing activities. Next, we have the balance sheet. The balance sheet is prepared to give an analysis of the assets owned by the company and the liabilities and equities that go into the business. Moving on, the break-even analysis sheet gives the break-even sales for each year. Next, we have the sensitivity analysis. This is used to calculate the uh, uh, earnings before interest, tax, depreciation, and amortization for four different scenarios. One is the actual scenario, the other is pessimistic, moderate, and optimistic scenarios. These assumptions can be changed according to the risk and return of your business. Moving on, we have the diagnostic tools, which is used to analyze the financial performance of the business based on this automatically generated. Moving on, the project evaluation sheet is used to calculate the net present value of the company and the internal rate of return based on the present value of all future cash flows. Finally, the financial performance of the business can easily be viewed through these effective visualizations in the dashboard. Thank you for watching this video.